Hello, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of June 9th, 2026. Wanted to talk about some recent news in the market this week. Specifically, the Iranian war is still going on. Looks like there's been conversations about a ceasefire, but still the conflict is ongoing, which has affected the market as well as in the past week or so. Specifically, started on Friday, there's been conversation about a potential sector shift out of tech and a bubble forming or getting close to popping in tech. And so I want to address that today, take a look at some charts like we always do, and show you what we're thinking about at Financial Life Planners. Wanted to start today by showing you a chart of the S&P 500. You can see on Friday there was a pretty big sell-off and we ended at a low here. And today there was a decent sized sell-off, but recovering nicely towards the end of the day. So we're sitting just below the all-time high, right around $7,400 in the S&P 500. This appears to be a little bit of a sell-off in capturing some of the gains that we saw since the bottom that we hit in April of this year. And if you watch CNBC, it seems like they're pretty frequently talking about a sector shift out of tech and into some of these more defensive type stocks, such as financials and healthcare. And I wanted to talk to you about what we're looking at when we're considering things like that. And when people talk about a sector shift, that means they're moving money from AI and tech, which has led the rally over the past couple of years, and into some of these more industrials, healthcare, like I said, defensive type sectors. And so what we have in front of us here is a chart going back to 2019, June of 2019, showing AI. ETF, AI and tech ETF, relative to the RSP, which is an equal weight S&P 500 ETF. So meaning that large like the Mag 7 don't have the majority of the ETF like they would do in like an SPY or the S&P 500 in general. Uh, I know that's a little complicated, but just showing basically comparing AI to the S&P 500 as a whole, so not weighted towards tech like it normally would be. The RSP is about 20% tech, whereas SPY would be closer to about 40% tech. So showing more of the sectors as a whole. And if we were seeing a downward trend in this, this would represent money moving from tech and AI into some of those other sectors. And so looking at this chart, you can see here that there's about a 6-year base where we hit an old high in December and January of 2021, dark 2020 and 2021, and then had a pretty decent sized pullback in 21 and 22 after 21 in December, making this new high that was a noticeably lower high, which is a bearish signal, and seeing this long-term basing of tech relative to the RSP. Recently, we've seen tech outperform RSP relative to this base, break through this old high that we had, hit a new high, test back in April after we saw the market pullback, test the old high and find support at that old high, which is a really good sign. You can see a couple times it finds resistance at that old high here in 2020, the old high, as well as getting close to resistance in April of 24, and again in March and April of 25, right before everything with the tariffs pulled the market back. And you can see us solidly breaking through that old high at the end of last year, retesting here again, like I said, and coming up to this new high that we're sitting at. This is showing signals of a bullish market. These moves with these tightening here, upward trend of these trends or these trend lines is a good move. And this pullback here is more of a give back than it is a bubble popping or anything like that. This is a pretty sharp move, so a give back that's a pretty sharp downturn is to be expected and is completely normal. Now, if this line, this price line, were to come back to this, old high that we caught support at before, and break through that on the downside, then that would be a bad sign, a bearish signal, and it might look like an actual sector rotation, but that's not where we're at right now. And all we can do is trade the chart that is in front of us. That's taking a look at AI and tech, not looking like we're in a bubble right now, even though we have had this really sharp run up over the past couple months, just because we are in a good spot going forward, as long as we stay above those old highs, like I mentioned before. And now, speaking to Iran, like I mentioned at the beginning of the video, this is continuing to get dragged out, which is kind of more or less to be expected. And like I said a couple months ago, the longer this gets dragged out, the more volatility there will be in the market, the more uncertainty, the more fear in the market, which is obviously a negative thing. Right now, like I showed you with S&P 500, though, just sitting below all-time highs. So, especially after that market run up that we've had over the past couple months, in a good spot. But if that does change, we will act accordingly with your portfolio. Also wanted to note, just because the market is doing well and that AI versus RSP is performing well, that isn't indicative of future performance, but it just gives us an idea of what has happened historically. That being said, that's all I have for you guys today. Look forward to talking to you next week. As always, feel free to reach out if you need anything, and we'll talk to you soon. All right, thank you. Bye-bye.